Good morning, everyone, and welcome to today's webinar. For those of you who have just logged on, we have already completed a sound test, and thanks to everyone who helped out with that. First of all, I want to introduce ourselves. My name is Holly McHugh, and I'm a marketing executive here at BrightPay. And also joining me to present today's webinar is Rachel Hines, who is the Marketing Manager at BrightPay. First, I want to look at the agenda for today's webinar. For part one of today's webinar, we'll look at the furlough scheme and what's changing as we approach the end of the scheme. In part two, we're going to look at COVID-19 and redundancies. And for the final part of today's webinar, we will have a quick look at the long-term impacts of furlough on payroll. And at the end of the webinar, we will have a questions and answers section where we will answer any questions that you may have. For our questions and answers session, we'll be joined by Paul Byrne, who is the Managing Director here at BrightPay, Victoria Clark, who is the Product Development and Training Manager at BrightPay, and Laura Murphy, who is our Chief HR Officer. If you do have any questions, you can type them into the questions box on your control panel at the side of the screen, and we will try to get through as many questions as possible. This webinar is being recorded, and all attendees will receive an email later today with a link to the recording, so it's no problem if you do need to leave at any stage. Also, in the email later today, there will be a copy of the presentation slides that we are using today, or you can also download the slides right now if you wish on the Handouts tab on your control panel. We will also include some useful documents and additional resources that you may find helpful in the email later on today. Now that all of the housekeeping is out of the way, I'm going to pass you over to Rachel to get started with today's webinar.
Thanks, Holly. Today I'm going to start with the furlough scheme and how the rates are changing as we approach the final few months of the scheme. When the Coronavirus Job Retention Scheme is running at full capacity, the government have contributed 80% of employees' wages, and this was capped at £2,500. Employers could only claim the grant for the hours an employee was not working, in which case they were only responsible for paying employer national insurance and pension contributions. Employers could also choose to top up their employees' wages above the 80% total and the £2,500 cap for the hours not worked at their own expense. And where an employee is on flexible furlough, or also known as partial furlough, employers had to pay full pay for any hours worked. The furlough scheme is expected to end on the 30th of September, and so for the final 3 months of the scheme, July, August and September, the rules have changed. Employees will still receive 80% of their wages, up to a cap of £2,500. However, the government contribution has reduced, and employers are now required to contribute the difference between the government contribution and the 80% pay. For the month of July, the government are contributing 70% of wages, up to a maximum of £2,187.50 per month for unworked hours. The employer must contribute 10% of wages, so that the employee receives 80% of their usual wages for any hours not worked, up to the cap of £2,500 per month. For August and September, the government subsidy will drop to 60%, up to a cap of £1,875 per month. with the employer having to top up the additional 20% so that the employee receives 80% of their wages, again up to the cap of £2,500 per month. Employers must continue to pay the employer NIC and pension contributions on the government subsidy for the hours not worked, and employers can also continue to choose to top up their employees' wages above the 80% total and the cap for the hours not worked at their own expense. And I'll pass you back over to Holly.
Thanks, Rachel. So now that you know how much you can claim, next is how do you determine which employees you can claim for? For periods starting on or after the 1st of May 2021, you can claim for employees who were employed on the 2nd of March 2021, as long as they were notified to HMRC on an RTI submission between the 20th of March 2020 and the 2nd of March 2021. You do not need to have previously claimed for an employee before the 2nd of March 2021 to claim for periods starting on or after the 1st of May 2021. And so this means employees who started working for you on or before the 2nd of March are now eligible for furlough. To be eligible for the grant, employers must have confirmed to their employee in writing that they have been furloughed, and you must keep a written record of the agreement for 6 years. Employers will decide the hours and shift patterns their employees will work, and so employees can work as much or as little as the business needs. And again, you need to keep records of how many hours your employees work and the number of hours they are furloughed for. For employees who are moving from full-time furlough to flexible furlough or vice versa, you will also need to agree on this with the employee and keep a new written agreement that confirms the new furlough agreement. If an employee is already on a flexible furlough agreement, this can be varied to reflect any variation in the working pattern between the agreed parties. The employer does not need a new furlough agreement each time the worker's hours change and can instead issue an amendment if there is a change in working pattern. Employers can enter into a furlough agreement with the employee more than once. There is currently no minimum furlough period. However, there is a minimum claim period of 1 week, which we will look at in more detail shortly. And I'll pass you back to Rachel.
So next is calculating a CJRS claim and determining what you can claim for. If you're in a position where employees are fully furloughed, you do not need to work out the employee's usual and furloughed hours. However, if an employee is flexibly furloughed, you will be required to work out the employee's usual hours, their actual hours worked, and their furloughed hours for each claim period. BrightPay provides functionality to calculate and apply furlough pay to an employee's payslip, and this includes support for flexible furlough. By entering in the employee's usual hours worked and the actual hours worked into BrightPay, the software will automatically calculate the prorated subsidy. There are different calculations to consider when calculating your employees' usual hours, depending on whether they work fixed or variable hours. And you also need to factor in the relevant reference period, and this depends on when the employee became eligible for the scheme. So first we'll look at employees who work a fixed number of hours. For employees on fixed hours who were eligible for furlough under the original scheme, the usual hours calculation is based on the normal contractual hours at the end of the last pay period, ending on or before the 19th of March 2020. And this is regardless of whether or not they were actually placed on furlough during the initial few months of the scheme. A different pay reference period exists for those who were not eligible for furlough under the original scheme. For example, new joiners after the previous cut-off date of the 19th of March 2020. For these employees, the calculation is based on the wages payable in the last pay period ending on or before the 30th of October 2020, and the employee must have been included in an RTI submission to HMRC between the 20th of March 2020 and the 30th of October 2020. Where neither the 19th of March 2020 nor the 30th of October 2020 reference dates apply, the employee is not eligible for periods starting before the 1st of May 2021. However, if you made a payment of earnings to the employee, which was reported to HMRC on an RTI submission between the 31st of October 2020 and the 2nd of March 2021, they may be eligible for periods starting on or after the 1st of May 2021, and their reference date will be the 2nd of March 2021. It's also worth noting that if an employee with fixed hours was on annual leave, off work sick, or on family-related statutory leave at any time during the last reference period, the usual hours should be calculated as if the employee had not taken that leave. For employees whose pay varies depending on the number of hours worked, again, the usual hours calculation depends on whether or not they were eligible under the original scheme. For those who were eligible for furlough under the original scheme, again, regardless of whether or not they were actually placed on furlough, their usual hours will be the higher of the average number of hours worked in the 1920 tax year, or the hours worked in the corresponding calendar period in the year before the furlough claim period, or the look-back period. As we have passed the 1-year anniversary of the furlough scheme, for claim periods starting after March 2021 onwards, the corresponding calendar period in 2019 should be used, as opposed to 2020, when calculating the usual wages for employees on variable pay, and this is also known as the look-back period. This is to prevent the issue where an employee may have been furloughed in the same month last year, and so would only have received 80% of their pay. So for example, for July 2021, you should use the hours worked in July 2019 so that those employees who were furloughed in July 2020 won't be at a disadvantage. And if your employee did not work for you in the look-back period for the month you're claiming for, you can only use the averaging method when calculating the 80% of wages. For all other employees, that is those who were not eligible under the original scheme, you need to calculate the usual hours based on the average number of hours worked in the 2021 tax year up to the day before the employee's first day spent on furlough, and that is on or after either the 1st of November 2020 for those with a reference date of the 30th of October 2020, or the 1st of May 2021 for those with a reference date of the 2nd of March 2021. And I'll pass you back over to Holly.
Next, we're moving on to making a CJRS claim, and employers need to make a claim through HMRC's online claim portal to avail of the scheme. BrightPay includes a CJRS claim report, which can be used to ascertain the amounts needed for input into HMRC's online service. HMRC have recently updated their claims process for employers who have 16 or more employees to make it easier to add their details when making a claim. You can now use a CSV upload if you are claiming for 16 or more employees. Previously, employers had to have over 100 employees to be able to use the CSV upload option. BrightPay can help users with creating the CSV file for upload to HMRC. The minimum claim period is 1 week, and claim periods must start and end within the same calendar month. Therefore, pay periods that span 2 calendar months must be broken down into 2 separate claims. It will only be possible to claim for a period of less than a week if the period claimed for includes the first or last day of the month and a claim has already been made for the period ending immediately before it. Employers can make claims before, during, or after the payroll is run, and claims can be made up to 14 days before the end of the claim period. Employers can only make 1 claim per claim period, so you must include all furloughed and flexibly furloughed employees in the 1 claim, even if you pay them at different times. When claiming for employees on flexible furlough, employers will need to report hours worked along with the worker's usual hours in a claim period. Therefore, it is best to make a claim once you're sure of the exact number of hours your employees will work so that you don't have to amend your claim at a later date. Next, with regards to claim deadlines, claims must be submitted within 14 calendar days after the month they relate to, unless this falls on a weekend, in which case the deadline is the next weekday. The next deadline is the 16th of August 2021 for claims relating to July 2021. HMRC may also accept late claims if you have a reasonable excuse, provided that you have taken reasonable care to try and claim on time and claimed without delay as soon as you are able to. HMRC have set out a list of various reasons that they consider to be reasonable excuses, and you can see them here on screen. You must contact HMRC to ask to submit a late claim, and you should do this as soon as you are ready to make your claim. HMRC should only be contacted once the claim deadline has passed. If you have claimed too much CJRS grant and have not already repaid it, you can repay it as part of your next online claim without needing to contact HMRC. If you claimed too much but do not plan to submit further claims, you can let HMRC know and make a repayment online. You must notify HMRC and repay the money by the latter of either 90 days from receiving the CJRS money you're not entitled to, or 90 days from the point circumstances changed so that you are no longer entitled to keep the CJRS grant. If you do not do this, you may have to pay interest and a penalty as well as repaying the excess CJRS grant. If you made a mistake in your claim, that means you received too little money. You'll need to amend it within 28 calendar days after the month the claim relates to, unless again this falls on a weekend or a bank holiday, in which case the deadline is the next weekday. The deadline to amend claims for June is today, the 28th of July. If you haven't rectified a mistake in your claim for June, but believe you have a reasonable excuse for missing the deadline, you must contact HMRC to ask to submit a late claim. And I'll pass you back now to Rachel.
Thanks, Holly. So next is employer compliance. And as part of HMRC's commitment to transparency and to deter fraudulent claims, details of CJRS claims are now being published monthly. The list of employers who have made a claim under the CJRS has been updated to reflect information for claim periods from December 2020 to April 2021, and employers who have made claims from May 2021 are expected to be added to this list from today. This list includes employers' names, an indication of the value of the claim within a banded range, and the company number for companies and limited liability partnerships. The employer names used for the publication is the name associated with the qualifying PAYE scheme, and so it may not be the same as the company's trading name. The publication does not include employers who have made an application to have their details withheld, or those who have paid back the whole grant prior to the publication of the list. Details for claim periods from December 2020 to April 2021 are also available to employees in their personal tax accounts. Employees are being encouraged to report fraud to HMRC where they have evidence that suggests that their employer is abusing the scheme. In September of last year, HMRC estimated that as much as £3.5 billion has been fraudulently claimed. But with the scheme set to run until September of this year, the amount lost to fraud could be much higher. Given the significant investment by the government and the sheer scale of the suspected fraud, it is expected that HMRC will be relentless in pursuing those who have taken unfair advantage of the scheme, and HMRC is now aiming to collect double the amount wrongly claimed. However, HMRC do appreciate that mistakes happen and is not aiming to target innocent errors. And as of the 30th of June 2021, HMRC has opened 6,150 inquiries into suspected overpayments through the CJRS due to fraud or error. Finally is what will happen when the scheme ends. The government had originally said that a new job support scheme would go live when the CJRS ends. However, given the extension of the furlough scheme until the 30th of September 2021, the job support scheme will not be coming into force. The government had also announced a job retention bonus. However, the bonus has also been shelved given the extension of the job retention scheme. It's unlikely that any further government subsidy or job retention incentive will be in place when the CJRS closes. So that's it for part one of today's webinar. And if you do have any questions on the furlough scheme, feel free to type them into the questions box on your control panel. But now I'm going to pass you over to Holly for part two, where we're going to look at COVID-19 and redundancies.
Thanks, Rachel. The number of redundancies in the UK has accelerated at the fastest pace since the financial crisis. In the 3 months to January 2021, 308,000 redundancies were made, following 204,000 redundancies made in the 3 months to February 2021. According to ACAS, redundancy-related calls to their helpline have increased by over 160% over the past 2 months when compared to the same period in 2019. If you are in the regrettable position that you may need to make redundancies, here are some of the key points you need to know. When making an employee redundant, there are 2 key initial considerations. You have an obligation to behave reasonably in order to avoid unfairly dismissing an employee, and if you are making 20 or more employees redundant within any 90-day period at a single establishment, you must consult employees. These 2 obligations still very much apply, and the impact of the pandemic has not negated these 2 obligations. For the purposes of today's webinar, we want to focus on smaller scale redundancies, that is less than 20, where collective consultation does not apply. We have drafted the following steps in line with ACAS guidance. You should aim to avoid compulsory redundancies through voluntary redundancies, agreed short-time working, or other flexible staffing arrangements. You should also carry out a consultation, and this involves speaking to every employee individually about why there are redundancies being made, and ideas and feedback on alternatives to redundancy. And it's important to ask employees for their thoughts on this as well. The consultation must be meaningful and your plans must not be finalised at this stage. You should aim to include any employee suggestions or ideas that you agree with. These meetings do not need to be face-to-face and they can be held virtually or by phone. Next is selecting staff for redundancy. Employers should use fair and objective criteria when selecting employees for redundancy. Ideally, all employees at risk of redundancy should be put in a selection pool and assessed upon criteria such as standard of work, experience and qualifications, and disciplinary record. Selecting those who have been on furlough over other employees may not necessarily be fair. These employees may have been parents with childcare issues or individuals with disabilities, so there could be a risk of a direct or indirect discrimination claim. Once you have selected staff for redundancy, you need to give employees notice of their redundancy, but we will come back to this in more detail shortly. You'll also need to work out redundancy pay, and again we will go into redundancy pay in more detail. And the final step is to support your staff. Redundancy is an extremely stressful time, so be there and available to take questions and support them. And it's also worth noting that employees that are being made redundant are entitled to paid time off to look for another job or to complete training. Moving on now to notice periods and notice pay. Employees must be given a notice period before their employment ends, and either statutory notice or contractual notice will apply. The statutory redundancy notice periods are as follows: at least 1 week's notice if employed between 1 month and 2 years, 1 week's notice for each year if employed between 2 and 12 years, and 12 weeks notice if employed for 12 years or more. It is always advisable to check your contracts of employment, as the contractual notice agreed may differ to statutory notice. Where contractual notice is greater than statutory notice, contractual notice will apply. However, where the contractual notice is less than statutory notice, then statutory notice will apply. Statutory notice pay is protected, meaning that employees are entitled to be paid in full for their notice period. If the notice in the contract is the same or less than the applicable statutory notice, 100% of the employee's normal pay should be paid during the notice period. Amendments to the Employment Rights Act, which came into force on the 31st of July 2020, confirmed that employees that are serving their notice period while on furlough leave will need to have their salary topped up to 100% pay. However, things are slightly different where contractual notice is greater than the statutory notice period. If contractual notice is greater by at least 1 week, an employee should receive their normal pay as long as they are working. If they are not working, however, they should receive what they would have normally been paid for in that absence. So if you have an employee who is out of work due to furlough and being paid at 80%, and this employee's contractual notice is greater than statutory notice, they may be paid at 80% for their notice period. So for this reason, it is extremely important to always check the contract of employment. And now I'm going to pass you back over to Rachel.
So there are two methods of paying notice pay to employees. You may retain the employee on the payroll and continue to pay them through their notice period. From the 1st of December 2020, the employer cannot claim CJRS payments from HMRC during the notice period. You can also opt to pay employees in lieu of notice. And it's also worth noting that where a payment in lieu of notice is made, it is still subject to tax and national insurance. Normally, an individual is entitled to statutory redundancy pay if they are an employee and have been working for the employer for 2 years or more. The employee will be entitled to half a week's pay for each full year they worked under the age of 22, 1 week's pay for each full year that they have worked when 22 or older but under 41 years old, and 1.5 weeks' pay for each full year they have worked when 41 years or older. Where an employee's weekly pay varies, their average weekly pay should be calculated using the 12 weeks before the date they got their redundancy notice. Redundancy pay is capped with a length of service being 20 years. For employees made redundant on or after the 6th of April 2021, a week's pay is capped at £544, with the maximum statutory redundancy they can receive being £16,320. Redundancy pay, including any severance pay under £30,000, is not taxable. As per employment law changes brought in under the Employment Rights Act on the 31st of July 2020, where an employee is furloughed or flexibly furloughed, if they are dismissed for reasons of redundancy, they are entitled to have their statutory redundancy pay calculated on the basis of their normal pay rather than on the basis of their reduced furlough pay. Average weekly pay is usually calculated by getting the average pay over the 12 weeks up to when the employer notifies the employee that they are being made redundant. Under the new legislation, employers must treat any weeks an employee spent on furlough over the 12-week reference period as if they were working and on full 100% pay. In terms of processing a redundancy payment through Bright Pay, we would advise that you create a new addition called Redundancy or Redundancy Payment. And when creating the addition, be sure that you leave unticked tax can be deducted and national insurance contributions can be deducted. There is a preset addition called Termination Award in Bright Pay. You could also use this option, but if you made any changes to the title here, it will impact on any reports that you might want to run. Therefore, the cleanest and most efficient way will be to create a new addition. And I'll pass you back over to Holly.
Thanks, Rachel. For the final part of today's webinar, we're going to look at the long-term implications of COVID-19 on payroll. Remote and hybrid working has forced us to explore tools which we otherwise may not have considered pre-pandemic in relation to payroll. Here, I want to explain how Bright Pay Connect can help with the challenges that many businesses faced throughout the past 18 months and will continue to affect businesses post-pandemic. One of the biggest changes we have seen in the workplace in recent times is the move to hybrid working. Since working from home during lockdowns, employees have been able to create a better work-life balance and hence want to work some days in the office and some days at home. And it's not just employees. Employers are also seeing how beneficial remote working and flexible working can be. Each BrightPay license can be installed on up to 10 devices, meaning payroll can be processed on multiple PCs or from multiple locations. This means minimal disruption to the payroll when the payroll processor is working from home. That's for the payroll software itself. However, if you are using BrightPay Connect, which is an optional cloud add-on to BrightPay payroll software, you can add as many users as you wish at no extra cost. With BrightPay Connect, the payroll is still processed on the desktop application of BrightPay, but the payroll information is stored online on a secure cloud server. You can also restrict access for these users. For example, some users might be able to view payroll data and distribute HR documents to employees, while another user, say a sales manager for example, can be set up so that they can approve leave for employees within their department with no access to payroll data or confidential documents. When there is more than one person working on the same employer file at the same time, it is important that no conflicting copies are created, which could result in mistakes in the payroll. This was a challenge at the beginning of the pandemic when people had to start working from home and were unprepared. However, last year we improved BrightPay's multi-user functionality to reduce the risk of conflicting copies. When opening the payroll software, BrightPay Connect will perform a version check and an other users check, and it will notify you if there is a more up-to-date version of the payroll available, or if another user currently has the employer payroll file open. Working from home has shown us that having access to payroll data from any location is so important. It's even more important to keep that information safe. BrightPay Connect will automatically back up a payroll file every 15 minutes when open, and again when the payroll file is closed down. You will never lose your payroll data again, as it can be quickly restored if needed. I'll pass you back now over to Rachel.
Regardless of whether your employees are working remotely or in the workplace, regular communication is essential for the success of your business. Without it, your employees can feel disconnected, morale can dip, and priorities can become confused. With an online employer and employee portal, you can communicate directly with employees at the touch of a button. With BrightPay Connect, you can upload any type of document or resource that you want to distribute to your employees through a secure online portal that they can access 24/7. Documents such as a company handbook, a contract of employment, or even a vaccine policy can be uploaded. Having a secure portal where documents are organized and all in the one place makes it easier for employees to find something when they need it, especially when they are out of the office. In a recent survey, 43% of accountants said that they had an additional workload as a result of the pandemic. For accountants and payroll bureaus offering payroll as a service to clients, it's important that you cut back and save time on manual tasks. One of the most time-consuming aspects of offering payroll as a service is the back and forth email communications with clients and chasing them for the payroll information. You don't need to make phone calls or even email your clients looking for payroll information anymore. BrightPay Connect gives bureaus the ability to send payroll requests to their clients, and this allows the client to be able to enter the payments, additions, and deductions through their secure online portal. There's also a payroll approval feature, which allows bureaus to seamlessly send clients their payroll summary for the pay period and the client can approve the payroll through their secure online portal, again cutting down on emails to the client. By introducing BrightPay Connect, employees can also access a self-service and smartphone and tablet app. With the app, the employee can view a payslip library and they can access HR documents. They can view their annual leave calendar and request leave from their smartphone. And they can view and update their personal contact details, all without needing to contact HR. The employee will also get notifications on their device if a new payslip is available, if a leave request has been approved, or if their employer has shared a document with them. Sending this important information directly to the employee's phone is so much more powerful than simply sending a company-wide email. So I'm going to finish up there with the sales plug, but if you do want to find out more, we do run online demos of both BrightPay and BrightPay Connect on a daily basis. So please let us know if you want to book onto one of the free online demos. So that brings us to the end of the presentation today. We've covered a lot on today's webinar, but we will send everyone an email later today, and this will include a copy of the slides and a link to the recording of today's webinar. So it's now time for the questions and answers. And if you have any questions, feel free to type them into the questions box on your screen, and we will try to get through as many questions as possible. For our questions and answers today, we are joined by Paul Byrne, Victoria Clark, and Laura Murphy. And Vicky has been keeping an eye on the questions as they've been coming in. So I'm going to pass you over to Vicky to manage today's questions.
Morning, everybody, and thanks, Rachel. There's just a handful of questions in, so we'll just run through them with you. There's the first question there. Will the end of furlough mean mass job losses? I don't know, Laura, do you want to take that one? Is that more your area?
Yeah, I'll take that, Vicky. Good morning, everybody. And probably this question came in before the girls touched on it in the presentation, but I think, yes, inevitably we are going to see a number of job losses, and I think the statistics that Rachel and Holly went through with ACAS having an increase of 160% to their helpline in relation to redundancy queries, so that kind of says it all there. I suppose if redundancy is something that's you think you might have to do, or you think you'll be looking at, now really is the time to start looking at it. If we look at the dates, if you're looking to make somebody redundant and you're in a collective redundancy situation where you're letting 20 people go, your deadline for starting your collective redundancy is the 31st of August. So the deadlines are coming up fast. Even if you're not making 20 people redundant, just be wary of their notice period. And if that is a month, maybe in terms of starting some sort of consultation, really around the middle of August, you want to start having some sort of conversations. So yeah, those deadlines are coming up fast, and I would expect that we will see a number of job losses.
And just to add to that, Laura, I think if you look at the fact that most employers who may not have been viable as businesses, who are just holding on to pay the furlough, because July, August, September is a period during which the employer has to contribute a whole load more to that cost, it's likely that they will, basically stop operating the furlough because they wouldn't be able to afford it. So we would hope that most businesses that are still claiming furlough are viable and, are reopening as we speak,
Thank you. Next question is, are employers still allowed to furlough staff due to health issues when they are allowing other members of staff to cover the hours, meaning there is lots of overtime? The employer can clearly afford to bring these people back.
I'll give it a go, Vicky, but again, please jump in if you have a different thought on it. My thought on this, I suppose, This one will really depend on the situation and knowing the background of the individual, their health issues, and who is requesting to be put on furlough. Is it the employer asking the employee, or is it the employee asking the employer to place them on furlough? I suppose in terms of if the employee is eligible and you're working within the rules of the scheme, furlough is still ongoing. So then I would think, yes, technically it is fine. But I suppose the thing has always been that it's always the employer's decision as to whether or not they want to put somebody on furlough. You know, it's not the employee. The employee doesn't have a right. Whilst they have a right to ask, it's the employer's decision whether or not you want to put somebody on furlough. So I suppose kind of thinking then about shielding and critical at-risk people. Obviously, we don't have shielding anymore. That's gone since March, and we now have new workplace safety guidelines from the 19th of July. So really, you should be looking, particularly with furlough coming to an end, you should be looking at ways and means of bringing everybody back in a safe way, and be looking at risk assessments and deciding, okay, if this person has health issues, health concerns, what are the steps, what are the adjustments that I need to do to bring this person back safely, because the 30th of September will come quickly, I suppose. So I suppose in a nutshell, yes, I think it's fine, but I'd be looking at ways to bring them back safely.
Thanks, Laura. How to calculate usual hours for employees being transferred under 2P. So with this, I suppose this is something that we can't answer here and now. I guess it's quite a large area of guidance that HMRC have published, and it all depends on whether they're variable paid, variable hour employees, fixed hour employees, and then it all depends on their reference date as well for CJRS. So there is comprehensive guidance on the HMRC website, and we would, I suppose, advise that that is consulted just to find out more information on that. Can you still claim furlough if someone is now back in work fully for an annual leave taken after being back in work full time? On the CJRS form, they haven't been marked off as the claim being over.
I'll start that one, Vicky, because my understanding is that you should not put somebody on furlough just because they are on leave. So if they're fully back to work, working full time, and just because they've gone on a period of annual leave, you should not put them on furlough. I don't think that would be in the spirit of the scheme. I don't know, you might know more than me, Vicky, in terms of the end part of that. They haven't been marked off as claim over.
Yeah, I don't think that would come into it at all. Like you say, Laura, I think it shouldn't just be a standalone reason that they're just taking leave. I suppose the underlying requirements by HMRC across the board is that your operations have been affected by coronavirus, and that will then determine, whether someone is to be furloughed or not. But just for an annual leave day, yeah, exactly. There's a little bit of a follow-up question there just that's coming from somebody else. Is it still permissible to utilise the furlough scheme to pay holiday pay for flexibly furloughed employees? I'm not sure if you can add to that, Laura.
Yeah, I think it's still permissible for flexibly furloughed. You'd be in agreement with that, Vicky?
Yeah, so whilst you're still on furlough, being flexibly furloughed as opposed to kind of having returned to work because you're now in a situation where you can. Yeah, I would agree. Okay, topping up furlough to 100% on notice is not possible anymore. You cannot claim furlough if employee is on either statutory or contractual notice from December, or am I operating under the wrong assumptions?
No, this person is correct. Yeah, you cannot claim furlough when paying notice period. So apologies if there was any confusion there, but yeah, you're under the right assumption. You're correct.
Okay. Is the last month of furlough in October 2021? It's actually September 2021, which is the last month you'll be able to claim for. In a redundancy situation, and the member of staff has holiday entitlement outstanding, does this have to be paid or can it be used against the notice period?
Yeah, I'll answer that one, and it's a good question, and it's actually a question that I put to ACAS a little while ago because we've had it in before, and they confirmed that no, you cannot use it against the notice period. So if there is annual leave outstanding, you'd have to pay the annual leave plus the full notice.
Thanks, Laura. So let me see what else has come in there. I'm not sure if Laura, there used to be an age limit to entitlement to redundancy. Does this still apply? Would you know that?
The redundancy entitlement is still calculated with age. I think it's 21. So depending on your age group, 21 to I think it might be 40s, it's 1 week. I'd have to just double check. Is it a half a week under 21? I don't know off the top of my head, but age is definitely still used in terms of the criteria and how much you are entitled to. And we can just we'll double check that and confirm to that individual.
Thanks, Laura. Can you claim furlough if the company has had to close, excuse me, due to lack of staff, as some are isolating? The staff that don't need to isolate are not enough to run the business. Any thoughts? That might be, this kind of maybe a grey area. I'm not sure if something we could advise on there.
My own view would be I don't see there should be an issue with that.
I suppose if business operations are affected.
Yeah, exactly.
Yeah, yeah, could qualify there. On a crossover period between one month end and the start of the next month, do you work out furlough on 7 days, i.e. 3 days at 8% and 4 days at 70%? You do indeed. You work it out, you know, if it's a weekly payroll, for example, and it's crossing over calendar months, then you work it out on the 7-day period. So coming into August, you'll have so many days at the 70% and then so many days at the 60%. And if you're using BrightPay, then BrightPay will automate that calculation for you.
Sorry, Vicky, just to go back to that other question on redundancy, just to double check with my notes. So the age limit, if you are under 22 years of age, it is a half a week's pay per year of service, but obviously you'd still have to have the 2 years worked up to be entitled to redundancy. But so if you've got your 2 year service and you have a redundancy entitlement, you're under 22, it's a half a week's pay. Just to confirm that.
Thanks, Laura.
Obviously, there's no upper age limit, Laura, no.
Pardon?
There's no upper age limit.
Sorry, I was just going to say, there's obviously no upper age limit in that case either.
No, the next bracket is 22 to 41 and then 41 plus, and obviously we've no compulsory retirement age in the UK, so no.
Okay, thanks, Laura. Is it still okay to use furlough for employees who have to self-isolate? Would you know that one, Laura?
I think it is. Again, the question is who has to self-isolate, and I'm going to complicate the question here, I suppose, and we're looking at what the self-isolation rules are. If you've been doubly vaccinated, then after the 16th of August, you shouldn't have to self-isolate. But I think at the moment, so I'm just reading the question now. I suppose it will depend on the situation and if they are still on furlough or if they're still on flexible furlough, because we have always said all along that furlough shouldn't be used for short periods of illness and short periods of sickness. So if it's just a short 10 days and you're just putting them on furlough just because they're isolating, then I'd probably say no. We've always said that if it's long periods of sickness, then you can put them on furlough for whatever reason. That's what the guidance has always said to us. But of course, if they're self-isolating, they will be entitled to SSP. So sorry, to answer that then to fully, I would say no to that one, Vicky.
Okay, thanks very much. So I think that's everything that's in. So I'll pass you back to Rachel then.
Brilliant. Thanks, Vicky, and thanks, Paul and Laura as well. So as I mentioned earlier, we will send out an email later today with a link to the recording of the webinar and a copy of the presentation slides as well. So yeah, I'd like to thank you all for joining us for today's webinar, and we hope you found it useful. Thank you. Bye.
Thanks, everyone. Bye.